Good afternoon, everyone, and thank you for being here. A very special thank you also to all the organizers of this event, which WeCan is honored to be a part of. So I'm Oliver Walker, and I'll represent WeCan today, and I'll tell you more about who we are and what we do with regards to helping banks and external asset managers with their compliance processes. So first of all, I'm going to share my screen. I hope you see it. There you go. And can you see my screen now? Okay. Well, first, I'm glad to be surrounded by our great guests today, all members of the Blockchain Association for Finance. They'll tell you more about the association and tell you how WeCan Comply impacts them and the financial landscape in general. So we have Nicole Curti, who's the board member of the Association of External Asset Managers. We have the Chief Operations Officer at Stanhope Capital. And we have Stephanie O'Dara, she's a lawyer and the president of the Blockchain Association for Finance. We have Cedric Henny, who is the Chief Operations Officer at Pictet Asset Services, and also Benoit Barbaro, who's the Group Chief Operations Officer at Edmond de Rothschild. So our discussion will be about an hour long and will be followed by a 30-minute Q&A session. So for those who are listening, feel free to use the chat to ask questions, and we'll do our best to answer the questions at the end of the talk. So now, if I may, could each of you please give us a brief 1-2 minute introduction about yourselves and how WeCan Comply has impacted you. So ladies first, of course. Let's start with Nicole, then Stephanie, Cedric, and Benoit. So first, a brief introduction.
Thank you, Oliver, for having us today with you. We're very thrilled to participate in this webinar. So myself, Nicole Curti, I'm a partner and Chief Operation Officer at Stanhope Capital, an independent wealth manager active in Switzerland, London, the UK, and Paris, France, as well as the US.
Thank you, Nicole.
Nicole, thank you, Oliver, for the introduction. So my name is Stephanie O'Dara. As you mentioned, I'm a lawyer and partner at Altenburger Law Firm. I'm specialized in banking and finance law. And one of my fields of expertise is actually the relationship between independent asset managers and their custodian banks. And besides, I'm a board member of one of the supervisory organizations, the Swiss supervisory organization, in charge of supervising independent asset managers, which name is OSIF.
Thank you very much.
Thank you, Stephanie. So my name is Cedric Henny. I'm with Pictet since 2007, presently Chief Operating Officer for Pictet Asset Services. Pictet Asset Services is the third business line of Pictet, alongside Pictet Asset Management and Pictet Wealth Management. Pictet Asset Services caters to B2B clients, B2B relationship, and we have 3 types of product for this B2B relationship. The global custody, where the client is giving all their assets in custody to Pictet. The third-party funds, where we are able to do everything around the fund, governance, custody, trading, and the asset manager or the institutional investor, the institution that is managing the fund, just manage the fund and distribute the fund. And the third one, and that's the one why I'm here today, is what we call the private custody. It's a relationship with independent asset manager like Stanhope today or many others around Switzerland or in the world. And there, the relationship is triangular. We have the B2B relationship with the independent asset manager, and we have a B2B2C relationship with the end client of the asset manager.
Thank you very much.
Good afternoon, everyone. I'm Benoit Barbaro. I'm the Chief Operating Officer of the Edmond de Rothschild Group. Edmond de Rothschild is a bank whose businesses are international wealth management and asset management covering both liquid funds and private equity, real assets as well. We are present in in several locations, mainly in Europe. I'm based in Switzerland, where the head office is located, but we have businesses in Luxembourg, in Belgium, in Spain, in Portugal, and in Monaco as well, and a big business in France. I've been in COO role and project management activities for 20 years or so, and I'm very thrilled today to participate in this conference, because clearly innovation is at the core of Edmond Rothschild activities and DNA. So I'm really thrilled to participate in this conference.
Super. Thank you very much, everyone. So now time for me to tell you a bit more about We Can Comply. So I'll share my screen again. There you go. So in short, We Can Group was founded in 2015. We're based in Geneva. Our main focus is the development of software solutions based on blockchain technology, specifically for the finance industry. So we typically define ourselves as a venture builder. So what does that mean concretely? Well, quite simply, we always work hand in hand with the stakeholders of a particular industry. We Can Comply is the perfect illustration of a true co-creation effort with the banks to address a very pressing issue. So teaming up with experts of the field is how we make sure that there is a market for every new solution that we deploy, and that there are enough use cases which can be properly and fully addressed. And that is very much the case for We Can Comply that I will present today. Okay. Little technical problem. Just 1 minute, please. Sorry, I'll get back to sharing my screen. Okay, so the Comply project started about 2 years ago, and at the time we approached the banks to identify the biggest pain points and, of course, how we could help them solve these problems with blockchain. So very quickly, the amount of work linked to compliance and exchange of information between banks and external asset managers clearly stood out. So we spoke to banks, we spoke to independent asset managers, and everyone agreed that things needed to change for the better. I had a slide that disappeared, but asset managers often complain about having to send the same documents, the same signature cards, same responses to compliance questions to all of their banks, individually by email or paper, and they would always do it again the next year or whenever an update came along. So that's not so secure, and that's also very time consuming. And also, asset managers were very open about their concern with the changes in regulation with FINIA and FINSA, and they were not sure how they would cope with the additional workload. And banks on their side had very similar points. They complained about the ping pong, the back and forth emails with their clients, and the quality of the information and documents that they would receive. So they told us how much time they would spend on the annual review of the external asset managers. Sometimes it would take months of paperwork arriving at the bank, also a big nightmare for them. So what came out of our discussions with banks and independent asset managers, that they would typically have dozens, sometimes hundreds of interactions with the custodian banks every year. And they usually don't have just one, but they usually have quite a few of them. So when we set out to build Comply, our goal was to free up as much time as possible for the asset managers and also for the banks. Very sorry, I have a technical issue with my slides. That's very unusual. Okay.
It's a pity, Oliver, because your slides are always very
yeah, there you go.
lively.
I'm back on the slides. Can you see the slides now?
Yes, we do.
Okay, that is great. Something disappeared somehow. Thank you very much, Stephanie. Okay, so now you can see I'm going to go back get back to the right slide. Okay. When we set out to build Comply, our goal was to free up as much time as possible for both sides, so external asset managers and also the banks. So on the left is how things currently look for external asset managers and the banks. So a lot of time spent at clients and less time taking care of the clients and adding value. And on the right-hand side is the outcome, the expected outcome of using Comply. And another key focus was not just less admin work, but also we wanted to raise the bar and set a standard for compliance in Switzerland. So up until then, banks were all following their own process, not really talking to each other. And so to make this possible, to make the solution possible, banks came together and worked very hard to come up with a set of standard questions and required documents, which would normally satisfy any bank's compliance requirements. So something very important for Comply is that trust and security were an absolute necessity. So to guarantee the highest level of security, the platform was and still is developed entirely in Switzerland. It's also hosted in Switzerland. Everything is in Switzerland. So the reason we chose blockchain was to make sure that the data was fully safe, encrypted. And the only way really in blockchain to decipher the data is to have the private key to access it. So as for the blockchain, we are using Hyperledger, which is co-developed with IBM. This is a private blockchain. So that means that all the members who have access to the blockchain are known. There are no unknown people on the blockchain. So very important points, no one has control over all the data. Anyone can choose who gets access to the data, and there is no way to corrupt the data, very important. And once in a blockchain, the information can be updated, but not erased. And a very key concept here is that there is zero knowledge proof. So Wecan doesn't have any access to the data within the blockchain. So we provide the infrastructure, so the pipes, if you will, but whichever information travels within these pipes is completely inaccessible to us. So one way we make sure to stay state-of-the-art with security is the InnoSwiss project that is run by the EPFL. So basically the point of the project, as far as compliance is concerned, is really to test our security, to make sure that we are essentially attack-proof. So part of it also has to do with measuring the ecological footprint of our activities. That's also another side. So all this is interesting, but how does that work exactly? Well, first of all, let's reassure everyone by saying that simplicity was a top priority. So that's why the look and feel of the platform is super user-friendly. You can access the platform with your web browser. You don't need to install anything on your computer. Very, very simple. So you could think of Comply as an ultra-secure vault, which allows external asset managers to store all of their compliance information, all their signature cards, and all of their corporate documents in one place. So it's pretty much a golden source of unique data, which you can share instantly with all of the banks. So of course, the bank on its side can select the questions they would like to see answered. They can adapt the selection to match the processes. And they can also add, for example, an extra question if they wish. And on his or her side, the external asset manager starts by creating a profile, responding to the KYEAM, that's a Know Your External Asset Manager questionnaire, and uploading documents. So they can also choose which pieces of information they would like to share and with which bank. So once they're done, they can share the complete or partial data set with all the custodians in one click. Also, banks on their side receive the information in a perfectly orderly format that doesn't happen all the time normally. So that's quite interesting for banks. They can review the documents in real time and share their feedback with the external asset manager. There's no need to send an email, no need to wait till the annual review. The information could be up to date 365 days a year. So to give you an overview of what it looks like, I'm going to show you through a few screenshots of the platform. So that's one. So all the information, as you can see here, about the asset manager is nicely organized. Also, every document and every question has a status, can be validated, can be pending, and it also has a due date, very important. Also, the signature cards can be managed on the platform. The bank can set up their own workflow to define how the asset managers are going to be validated in the platform. And also, very, very important, whether you are the asset manager or the bank, you can view the entire history of the changes. And that's very, very useful when you do your annual review. So now to illustrate the everything, I'm going to give you a few examples of how Comply can help the users. So let's say, for example, that a bank cannot accept a document or needs an update, for instance, that can happen. So very simple, the bank notifies the asset manager with a comment, and the asset manager receives it instantly and uploads a different one on the platform. And what's really interesting is that not only does the bank benefit from the update, all the banks in the relationship with the asset manager receive it as well. And that's a real-time saver for everyone. So even if you haven't asked for an update, you receive the update. Now, let's say that the asset manager hires a new employee, for example. So a new profile can be created within Comply, and the rights of the employee can be set up in Comply directly with a signature card. The asset manager can update the signature cards of all the employees in the platform, and they can share it with one or even all of their banks at the same time. The use case would be, let's imagine you are thinking about opening a relationship. And at the moment, the compliance workload may hold you back or slow you down very much. And with Comply, your data is already there. It's already in the system. So if you are an asset manager, you can simply look up the bank of your choice. You send information through. You don't need to start from scratch, and you don't need to send all your information again, basically. And super important, if you are a bank, you could technically simply ask your external asset manager to join the platform, and then you can walk out of your meeting without any sensitive documents in your suitcase. Well, as you can see, all these features can already have quite a significant impact on the way banks and external asset managers collaborate. But the plan going forward is not to stop there. So we are already working on future developments, and we're addressing new regulations head on. We want to help asset managers get ready for the FINMA license application. So that's why the next step is going to be to allow asset managers to give access to their auditors to check their data in Comply. Or they could even request a quote from auditors available on the platform and use the services. So we're also considering ways to push this information to the FINMA for a direct upload in their EHP platform. So that's quite a feat, but that's something we are working on. Over time, we would like to extend the possibilities and allow users to share different types of data and also connect with other actors like brokers, supervisory organizations, and perhaps, as I mentioned, even the FINMA. Finally, we've talked about KYEAM, but what about the end clients? So what's very important to mention is that KYEAM was never the end game. So it is very useful for now, but we are already working on a KYC for trustees, and we also have other leads. The next step could be KYC. So this is all something we are thinking of. We are in a process of developing. So gradually, the vision for We Can Comply is to become the one-stop shop for standardized, shareable, and auditable data. Maybe one word about the ecosystem. As far as the ecosystem is concerned, at this stage, as you can see here, a lot of banks and external asset managers have already joined the platform, and more are just about to be announced, also in the Zurich area. Well, now, aside from this presentation, I think it's very important to hear from the actors of this industry, so who have co-created this solution. So I think maybe now a good place to start would be to have Nicole intervene. I'm going to stop sharing my presentation. Right. Okay, so now we are all back on the screen. I have my first question is to Nicole now. So, as the vice president of the SWM and the chief operations officer of Stanhope Capital, you have a deep understanding of the needs and the challenges of external asset managers. Can you perhaps tell us how We Can Comply addresses these needs and challenges? And also, could you perhaps elaborate on the future developments of We Can Comply, which will facilitate the life of external asset managers?
Sure. Thank you, Oliver, for these very interesting questions. So maybe let me just step back a second, and I will share my screen. It will work or not. No, I have strangely same problem as you.
Okay, I'm not the only one. That's good.
Hold on. Just 1 second. No, I can't share the screen. Here you go, I think. Yeah. So just maybe to step back, as I said, just to explain a bit what the difference is between an external asset manager and banks for the people that have logged into this call. So first of all, Switzerland, as part of the wealth management industry in the world, represents a quite important part of the pie. So 1/4 of the money managed for private clients and in the wealth management industry in general is in Switzerland. So I think it's a real topical what we're discussing here. There are around 240 banks in Switzerland and 2,500 external asset managers that are distributed in the 3 regions. As you can see, around half of them are in the Swiss-German part, 1/3 in the French part, and the rest in the Italian-speaking part. Now, as Cédric mentioned in his introduction, wealth managers, external wealth managers, and banks have to work together in a sort of 3-way relationship with the client. So the client has the money deposited in the bank. The external asset manager has a power of attorney to manage the assets and therefore interacts with the bank and the client. And as you can imagine, there is a lot of documents that need to be exchanged with the bank so that the bank can approve an external asset manager on its platform as being a serious player. And I'm sure Stephanie is going to touch upon the new laws that came into force, which are also regulating external asset managers now since the start of this year. But as you can see on the far right of my slide, is the problem of the external asset management industry is that we don't interact just with one bank. Very often we have multiple banks. It obviously depends on the business model of each of these 2,500 external asset managers, probably depends on the size that they have. But in many cases, they will have at least a couple of banks they interact with. And sometimes, like in our case at Stanhope Capital, we have over 60 custodians that we interact with. That obviously creates a challenge in terms of sharing documents, of sharing information. Every bank will have a request on how the information needs to be shared. And I think and now I can stop sharing my screen. I think We Can's idea was just simply brilliant, is the fact that it has really created a set of data where it allowed, We Can has brought on the same table several banks and external asset managers to sort of agree on what kind of data is common to everyone and how this data can be standardized and shared between the banks and the external asset managers. And I think that is really the future in our industry. I think our industry will be about standardizing data, not only with banks, actually, it will go much further. It will go also with regulators. All the external asset managers have to file now with the regulator an unbelievable number of documents that need to be shared. So if we can sort of contribute together with We Can, to standardize that data and make it available in a very simple way, I think that will really alleviate our industry on all the sides. Ultimately, as Oliver mentioned, the grail will be to have also the client data standardized so that we can exchange information with clients, with trustees, and therefore really reduce the amount of manual and paperwork that is currently performed in our industry. I think what has to be borne in mind is that external asset managers don't have the size and financial depth to start developing IT solutions to help them, reduce, as you showed in your first slide, Oliver, reduce the amount of administrative and compliance work. And therefore, I think the alliance, for example, of Swiss wealth managers that I also represent today is very grateful to Pictet, Lombardi, and Rothschild, who have actually agreed to launch this project together and facilitate the standardization of the information in our industry and sort of kickstart the innovation, which I'm sure will go from Switzerland also to other countries in Europe.
Hope so too. I'm also very grateful for these banks coming together and helping build this project. Thank you very much, Nicole. Maybe now a question for Stephanie. So Stephanie, as the president of the Blockchain Association for Finance, could you perhaps tell us a bit more about what the association stands for, what they do, and what were the driving forces behind the creation of the Blockchain Association of Finance?
Of course, Oliver. Maybe first, what made us decide to create this association, this Blockchain Association for Finance? Well, I can tell you that when banks and independent asset managers started to join the We Can Comply platform, we actually quickly realized that there was a need of general governance among the users of the platform. Every bank, as Nicole mentioned, every bank has its own needs, has its own standard regarding the KY of its independent asset managers, also regarding the annual review, the recurring due diligence they want to put in place for their independent asset managers. And also concerning the independent asset managers, they also have their own needs, their own challenge when they have to share their information, their documentation with their custodian banks. And as Nicole mentioned, they could have several dozens of banks with which they have to share information. So it was important to create an association that could ensure that the We Can platform is always in line with the needs of its users. And this association gathers, as you certainly understood, both banks, custodian banks, and independent asset managers. It is a non-profit association, and in its board, we have representative of custodian banks and representative of independent asset managers. Now, regarding the goals of this association, I think we can say that it has 4 main goals. First, as I just said, the association provides general governance and management rules among the users of the platform. Second, it ensures the platform continuity as well as the future development of the platform. So there is a service level agreement that was put in place between the association and We Can. And one of the goals of this service level agreement is to guarantee the continuity of the platform. For example, in the event that We Can is no longer able to manage the platform, which will never happen, I'm sure, the agreement provides that the association will be able to recover the source codes. And also the SLA governs the way the members of the association, the banks and the IAM decide on future common developments of the platform or on future functionalities. Nicole mentioned that we can imagine sharing information about the clients. This is one of the topics we need to discuss with all the banks, with all the independent asset managers, and that's the reason why we create this association. The third goal of the association is to improve common standards on the KYIAM onboarding and due diligence between banks and IAM. So as Nicole said, when WeCan started to implement the platform and working with the different banks, we can realize that the KYIAM of the various brands were very different. And some banks asked many questions to onboard a new IAM, some others much less. So the idea was to open a dialogue between the banks and also with the IAM to define this common standard that could fit every party. Of course, some banks will keep asking for more questions, some others will remain with their own question, but at least there is a common standard. And WeCan and the Blockchain Association for Finance worked several months to formalize these standards. The last goal of the association is to follow the regulatory changes to foresee the future development of the platform. And this is why we are currently organizing a workshop between banks and IAM or association of IAM with the regulators, such as the supervisory organization, the new organization in charge of supervising the asset managers, and also with FINMA, as well as with the auditors. And as you certainly know, there is currently an important regulatory change for independent asset managers. They're supposed to be licensed by FINMA by the end of next year and to be supervised not only by FINMA, but also by this new supervisory organization. So there will be several layers of supervision on the IAM. First, their auditors, then the supervisory organization and FINMA, and finally, in a way, the custodian banks. So this is why we're currently discussing with auditors, with the supervisory organization, with FINMA, to determine whether these regulatory changes can have an impact on the bank standards on onboarding or on regular review of their independent asset managers. So I'm now, I think that those were the main goals I can think of, and maybe we can discuss the regulatory changes for independent asset manager a bit later.
Okay, thank you. I think you covered the topic quite well, and I think everyone has a really deep understanding of what the Blockchain Association for Finance is and how they can play a role with the WeCan Comply solution. So maybe now I have a question for our bankers here. So I have my first question would be to Cedric. Cedric, so as a Chief Operations Officer, you've been very active in deploying WeCan Comply at Pictet. What was the trigger for you to adopt Comply?
Yeah, thank you for the question. The main trigger, and it's perhaps strange for a bank, main driver was not the money or the financial gains or the efficiency we could have through the solution. I would say it will be a consequence of what we are trying to do. So the main driver, for me at least, were mostly subjective and I would say some intangible driver, and you will see that it's reconvert very well with what Stéphanie just said, in fact. I think the first one was being part of an innovative project that benefit to the Swiss financial industry as a whole. And really, I think it's important. Swiss first, and perhaps the world later, but we want to create something for the Swiss financial industry. The second topics, or the second dimension, was really the creation of a community of interest between banks and independent asset manager. We collaborate for years and years, but there was no clear framework to be around the same table and to exchange around the problem that we have, the same problem that we can tackle together to better work together. And I think it was the second driver. And the third driver, and we come back to innovation, we come back to technology. I think it's because it was a use case that is a use case with a fast time to market use case using the blockchain technology. But it's a use case that does not have the same problem or the same problematic around topics like cryptocurrencies or like tokenization of investable assets, where you have some regulatory question and a lot of topics to go around before being able to go to market with such project. And there, Benoit, just after my intervention, will give you more flavor around this third topic. But if I come back to the first one, saying that is an innovative project benefiting the Swiss finance industry, I think it's really a project that is in line with what the regulators also want, and one of some other players in the industry are thinking about. It's this open banking projects, open banking theme. And I think there it's a bit different because we are not targeting the end client, and we are not trying to change something. We are not trying to disintermediate or to find a new way to be intermediated. We really took a use case that is existing, the B2B relationship between independent asset manager and banks, and we try to fix it, if I could say like that, to fix it or to better it through technology, to have a better relationship benefiting all the parties around the table, and at the end of the day benefiting the end client also. If everything runs smoothly, what we can cater to the end client, either directly through the independent asset manager or through the bank, will be of better value, I would say. And if we look at the creation of the community of interest, Stephanie just disclosed or give you some flavor around the mean of the association and so on. I think it's really important, because if you don't have a standard, you can put all the technology you want, but you will stick to a relationship or that will be one-to-one. And we know that independent asset manager, they have one-to-many relationship. I was planning to say that they have between 5 to 15 banks, and Nicole just before said Stanhope, they have 60 banks, so 60. So it's already quite big. So this one-to-many relationship is really cumbersome. So if we find a standard and we can transform this one-to-many relationship through a one-to-one relationship, I would say, or one-to-many, but each time the many is the same. So at the end of the day, it's like to have a one-to-one relationship. And that's really what we are trying to do, define a standard being yourself, between yourself, ourselves being a lot of independent asset manager and a lot of banks. And I hope that a lot of other banks will join. And based on that, we can apply technology, and in that case, innovative technology through blockchain to that project. Perhaps Benoit, you can give more flavor around the third point I just mentioned. Thank you.
Yeah, thank you, Cedric. I fully agree with what you said, and I think the reason why we decided to join WeCan are exactly the same as the one you mentioned. And I would emphasize one of this objective, which is, I think WeCan gave us a very good reason to talk about innovation and blockchain without having to deal with cryptocurrency. And I would say, especially since the beginning of the year and the speculative frenzy and all the turmoil we experienced on this market, as a conviction house, we are very prudent from a general standpoint with regard to cryptocurrency, because we think that at the moment, the characteristics of this market is not really aligned with our positioning and our DNA in terms of long-term views and sustainability. I think that's quite important to say, and we need to emphasize this. When you deal with innovation in general, when you deal with technology, I think it's very important to keep a critical eye and in the end, not to go for innovation just because it is innovation or just because you want to speak about innovation. I think as a responsible company, you need to analyze each risks which is embedded behind technology and behind innovation, and to make a final call. And that's the call we are making with regard to cryptocurrency. But if we are not really convinced by cryptocurrency at the moment, on the contrary, we are convinced by the technology which is behind, which is blockchain and decentralized ledgers. And that's the reason why we wanted to be part of the We Can Comply adventure, because we think that there is a lot to do in terms of exchange of data. It's at the core of all the regulatory challenges that we are facing at the moment, and we do think that that decentralized ledgers can bring a lot of value to this regard. And the We Can Comply initiative, by being an ecosystem, bringing together different financial players like EAMs, like banks, is the prime example of what we can achieve when we share a common view in order to gain efficiency and in order to reduce the administrative burden and to reduce risk as well. Because in the end, when you gain in efficiency, usually you reduce the operational risks which are behind. So yes, we wanted to be part of this innovative project, which allows us to talk about blockchain without having to talk about crypto money, which is good. And I think we need to go on educating people to this regard, because there is a sort of amalgam today which is made between blockchain on the one hand and cryptocurrency on the other hand. And I think we need to go on educating, because I think decentralized ledgers are much more than crypto money, and that's clear when we look at a project like We Can.
Perfect, completely agree. Very interesting. Maybe now, Cedric, although the implementation is quite recent, which benefits are you expecting, both perhaps financially and on your workflows?
As previously said, I think the main benefit, or the main direct benefit, is for the independent asset manager. But still, at the bank level, we are discovering the benefit. And I would say there is two factors that we are looking at mostly, is the digitalization part, and it's a standardized data exchange model that comes with a solution. So I think it's very interesting, and I think we discussed a bit before. We are transitioning from a paper-based world to a digitalized one. And in fact, We Can does replace snail mail, emails, phone calls that we had every day with the independent asset manager to input new data in our systems, to be sure that either the onboarding of the independent asset manager or the day-to-day ongoing relationship is up to date between themselves and ourselves. And with We Can replace that with a standardized data exchange model, and after we can update our systems through that data exchange. And there, I would say there is two models for banks. I think there is a model for small banks, or perhaps the smaller banks would be interested in a full-fledged model, and the larger banks are more interested in capturing the data from the platform. So for small banks, or for banks that would like to leverage the full the full potential of the platform, they can really rely on We Can Comply for the whole value chain of a relationship with independent asset manager. They can switch to We Can Comply for the signature card, for the contact details of the employee at the independent asset manager level, and so on. So it can really be a tool for a bank. At Pictet, we had already a lot of tools and a lot of automated processes around the relationship we have with independent asset manager. So our decision for the time being is really to use We Can more as a way to have a standardized data exchange and to go and pick the data through an API, an application programming interface that We Can is developing on their side, and we are developing on the side of the bank to facilitate the data exchange. I think that's the main things that we are seeing today, and in the future there is a lot of other use case that we will certainly discuss at the BAF level, as Blockchain Association for Finance level, with our trusted independent asset manager and banks colleagues.
Great, thank you very much. So listening to all of you now, it seems that everyone is very convinced about this blockchain platform. Perhaps a question for Benoit: what challenges do you see in the adoption of this blockchain platform at the moment? What is maybe still slowing people down from going on the platform?
Yes, Oliver, I think that the challenge will not be technical, because I think the platform is quite user friendly, as you showed. I mean, I think the real challenge will be more the change of paradigm behind the concept of data sharing, which is embedded in this project. From a general standpoint, I would say that as a client, as a citizen, we are used to provide data. We are used to be requested data, and we provide data on demand. Very often, several times a month. How many times did you provide your name or your date of birth or your address or your email address on a website? Probably several times a month. But we do it when we are requested to do. It's not natural. I mean, the lead today, from the authorities, from the retailers, the lead is with the demander, the requester. So we are in a sort of push mode, I would say. With decentralized ledger and with this kind of platform, it's a complete shift. I mean, the lead will be with the provider. So it will be up to the EAM to share their data, so to update the data and to complete the formula on the platform, and to be able to update them. Otherwise, I mean, it will not work. The beauty of it is that you will have to do it just once, which will be much more efficient, and then to share with the requester. But it's a change of mindset. You have to change your processes internally. You have to put the right resources behind. So I think that's where the challenge sits clearly. But that's something we will for sure accompany as a bank. We need to put some change management behind. But that's where the challenge is. So we need to build trust as well around the platform, because I think that's the starting point. People need to feel secure with regard to the data they provide, but they need to be proactive. They need to be in pull mode instead of being in push mode today. Sorry, the contrary. They need to be in push mode instead of being in pull mode today. So that's the shift we need to address clearly.
Great, perfect. Thank you very much. Maybe I have another question. That's pretty much for all of you. Over time, how do you see blockchain reshaping the world of finance, and more specifically wealth management? Do you think that things you mentioned, that there is a change of paradigm? Do you think maybe other things are going to change, or that do you think this adoption is going to be quicker, and that we can expect more changes to happen in the next few months, next few years?
Do you want me to go first, or?
Perhaps, sure.
Okay. Well, I think technology has already changed totally the way we work in finance, but also just our lives as individuals. I mean, could you have imagined 10, 15 years ago that when you wanted to buy a book, you would log in to your Amazon account and do a few clicks and have your book delivered the next day at home? I think, or when you want to do a payment, you use PayPal, or you owe 20 francs to someone and you can just twint it over. I mean, I really think technology has changed the way we work, we engage with people, and technology has changed the way clients trust. I think that before, the trust was really established just with the client advisor or the wealth manager. Now the trust is a lot about your iPhone and the apps sitting on your iPhone. So the digital products that have sort of helped us or help us in our day-to-day life, in relation also obviously to finance and wealth management. And there you have a whole new generation of clients who are very happy actually to experiment new services, new ways of handling things, and to be sort of the guinea pigs of new startups that are creating innovation in a way of delivering a service. So I think the resistance to change has also become far less. And there is a real incentive today for people to try digital tools, and the way and the fact that these digital tools with the blockchain are becoming much more secure will be a real incentive for a deep change of paradigm, as we discussed during this webinar.
Perfect. Thank you very much. Okay. We have actually received one question from someone on the chat, and they were asking why, if UBS, Credit Suisse, ZKB, and PostFinance were already on the platform, and if not, why is it not the case? Well, this is a really good question, and thank you for asking the question. We are currently in talks with many different banks. Many different banks at the moment are talking to us. As other participants today mentioned, it is not very usual for banks to talk to each other, to adopt solutions quite rapidly, and they have really heavy processes sometimes. So the banks that you mentioned, some of them we are in a conversation with. We are trying to find ways to establish the solutions. But they are very interested in the project. Something that we have heard from the banks all around is that the project is very interesting, especially for those banks who have a lot of relationship with external asset managers. And UBS and Credit Suisse were mentioned, and these are absolutely always mentioned by external asset managers. They often have relationship with these banks. So this is a solution that makes perfectly sense for these banks and for all the banks who have relationship with external asset managers. So rest assured that we are hard at work developing new solutions. As you could see on the screen I presented earlier, a lot of banks were based in the Geneva area, and we are really very, very active at the moment also in Zurich. So that was also one of the comments we had, was that most of the activity for now was on the western side of Switzerland. But rest assured, the next few weeks and the next few months are going to be very active also on the other side of the Röstigraben. Can you perhaps see some other questions that were asked on the chat, or maybe I can ask a few myself?
Or we can continue with the roundtable around the blockchain and the fact that it will perhaps change the wealth management or not. I think for me, working for a bank with a long history, it's it's a bit a difficult question to answer, because as you can imagine, if you take a blockchain and you add up a bit of artificial intelligence or deep learning tools, in theory, you would be able to disintermediate completely the value chain, the wealth management value chain, and perhaps the independent asset manager could also be disintermediated. And so if you look at the technology part only, you can dream of a decentralized finance world without any banks, any independent asset manager, and so on. At the end of the day, I'm not sure that that's what the client or the end client wants. I'm not sure. And I think the incumbents, the ones that are already there in the market, are the ones that are in a really good position to leverage the technology. And I think that's what we are trying to do with WeCan. You had a slide before showing that the compliance part or the administrative part was very high, and we try to make it quite minor to have more time dedicated to the clients. And that's it. I think it's really the right way to use the technology to try to free up time, to have thought leadership, to have discussion, really strong discussion with our clients, being able to understand their needs in the nitty-gritty, and to bring them tailor value solution, and not to use blockchain and robo to make the wealth management part of the relationships we have with them. On the other side, I think if we think about the post-trade, for example, post-trade when you buy a stock on the market, and what does happen post-trade is something that is very centralized this day. And there, you can imagine that the blockchain would completely decentralize the way the settlement of a financial instrument is made after the trading. So it will be really interesting in the coming months or years to see what the market infrastructure player like SIX or other player are coming with a solution for the industry. But because at the end of the road, we end up once again of the question, will be there a standard, and everybody could rely on a standard, and things will be quite better if there is a standard. If there is no standard, you will have to choose a solution, but how do you know if you choose the right one? You know the story of VHS and Betacam. I think if you bought a Betacam at one point in time, you had to put it in the fridge or in the curb, I would say. And if you bought VHS, you were running VHS for 10 years or 20 years more than the Betacam. So I think in the financial world, through the blockchain, we will have this kind of Betacam VHS moment in the coming, I don't know, months, years, I don't know, but it will come, I think.
Yeah, maybe to complete what Cedric said, in terms of disruption of our activity, to a certain extent, yes. I don't know exactly when, but to a certain extent only. I think the blockchain technology in particular can bring a lot of value when it comes to processes, when it comes to operations. So here, yes, I think we will see this Betacam VHS event sometimes. I don't know exactly when, but it will come. That's sure, because we need to decentralize and disintermediate these kind of processes. But when it comes to the core of our business, so banking, wealth management, investment, I think here I don't see how we could have a sort of disintermediation in the near future. One of the reasons is that we are a regulated activity, and I don't think that regulators and authorities will see disintermediation from a good eye, I would say. You need responsibility and accountability in this business. And if you need accountability and responsibility, you need a name, you need a company, you need a brand, and that thing that will not change. And so if you disintermediate all the processes and investments, etc., in terms of investment protection, in terms of money laundering, etc., I think this will not work. And regulators, authorities, we will always want to have a name and a company behind all these challenges. So that's, I think that's why there will be a limit to what we can do with blockchain. I think we can do a lot in terms of operations and efficiency once again. But when it comes to the core of the banking business, I think we still need to have people to trust, brain to trust, companies to trust, instead of a pure technology or platform to trust.
Perfect. Thank you very much. I have a quick question for Stephanie. Stephanie, you are the president of one of the new supervisory organization, the OSIF, and I would like to know what's your view on the changes, regulatory changes, and also how do you think Comply is going to help? What do you think of these initiatives? I think Swiss banks and external asset managers have been riding a very bumpy road. That's the least we can say. And on many occasions, concern have been voiced by asset managers, banks, SROs, and with the end of banking secrecy, the tightening of regulation, and also more recently, FINSA and FINIA. So what do you think about these changes in regulation, and how do you think initiatives like this one are going to help?
Thanks, Oliver, for the question. Maybe just to be 100% correct, I'm not the president of OSIF, I'm the vice president of OSIF.
Vice president.
Okay, yeah, I mean, the concern today for asset managers, and I have to be honest, is not really about sharing information with the banks. Of course, they have this concern because that takes time for them to share their information and documentation to the different banks with which they're working. But currently, as I mentioned before, there is a regulatory change which is very important, and in terms of administrative burden for them. They, as I said, they are supposed to be licensed by FINMA by the end of next year, at least for those of them who started working in 2019 or before. And this requires a lot of work and administrative tasks. They have to think about reorganizing their companies, because the law, which is FINIA, the Financial Institution Act, asks them to be organized in a way to manage their risk. Some of them have to have independent risk managers and independent compliance officers. And for very small structures, that's not that easy. So they're currently thinking about how to be organized, how to get organized in order to comply with the requirement of the law. They also have to comply with the other law, which is the Financial Services Act. So they have to amend their asset management contracts, amend their advisory contracts, put in place the information fact sheet for clients, and has to be done by the end of this year. So they're working on this. They're working in parallel on their organization, and they're also working on all the policies they have to provide to FINMA by the end of next year in order to file their application form. So that's important work. I mean, it's feasible, but for asset managers who want to take the time to develop their clients, it's really a concern. I'm pretty sure that the solution of We Can Comply will ease their life, will reduce their cost, will save their time, especially now when they really need to focus on their FINMA application.
Okay, would you say that that there is progress with external asset managers when it comes to to requesting their FINMA license? Where do you think we stand, and what do you think is maybe holding people back from starting this process?
Well, we've seen in the past few years that when there was a change for us independent asset managers, they usually decided to, to implement them most of the time at the very last minute. So that's not new. Some of them are very good, and some of them already applied for their FINMA license. But what we've seen is that most of the asset managers did not apply it yet. I don't know if you looked at the FINMA website, but only 2 asset managers were actually licensed by FINMA since the beginning of this year, which is nothing. But what I think and what I see in the industry is that some of them are working on it and planning to apply by the end of this year. Others want to see how it's going on. I mean, how is FINMA going to look at these files? How is FINMA going to review their files? And they want to, wait a bit and check the way FINMA is going to apply those laws. And I would say that it can make sense because we've seen that FINMA is giving interpretation of the law step by step. So we recently had information about what FINMA calls a risky business model. So we had this information, it was disclosed to the public just recently. And if you are considered, and if you have a business model that is considered as risky as an asset manager, that means you have to put in place an organization that is more important. So we got this information. I mean, at least this information was disclosed to the public recently. So I can understand that some of the asset managers wait a bit. But I have to say that they have to be careful, because if FINMA is receiving all the files in the last semester 2022, that might be a mess.
Right. Let's hope people start, putting everything together and structuring the data and also starting to work on this very important topic. Maybe that's also interesting for you, Nicole. We at Stanhope, I don't want to be too intrusive, but how ready do you think you are when it comes to regulation? And also, perhaps, how do you think we can help you be more prepared?
Yeah, very good question. So to be clear, we haven't filed yet. There are different reasons for that. The main one being that we just, acquired a business. So we just needed to update our papers in relation to that. I think we are quite ready as a business in terms of filing and, having all the policies and structure in place so that you can deposit that file with the FINMA in a pretty straightforward way, but it takes time. I agree we should all sort of rather do it now than wait until last minute next year, because as I showed, there are like 2,500 external asset managers in Switzerland. So there will be a bottleneck at some point at the FINMA. I think our challenge is that we need to do that for the FINMA. We need to do similar things for the banks when we need to share, information with them. So again, I think where we could play a really important role is to sort of create, which you've already done, create that standardized way of sharing the information. We also have to share similar information with our auditors at the year end when we are audited on the past year. So yeah, I think there is a real place in the market to come in and standardize that sort of information. And then, as I already said, go even further, further than that, not just on the EAM side, but go even the step further, which I'm sure will come. We'll see how many years it will take.
Very good, very good. Thank you very much. Perhaps one question for Cedric and Benoit from banking perspective. How do you think these regulations are going to affect your relationship with external asset managers? Can you already see an impact? Can you already see some changes in the way your compliance departments approach asset managers? And also, same question as for Nicole, how do you think we can help address these issues?
I don't know, Benoit, if you want to answer first, or I can go. I think I would say the Blockchain Association for Finance is really the tool that could make a difference, and that is linked to WCAN, but that could make a difference in that process. We already had some meetings with FINMA through the Blockchain Association for Finance, and we don't have answer today, I would say, because the big question the bank have is, are we able to rely on the fact that the independent asset manager will be in fact supervised by the organisme de supervision, and that the organismes de supervision are under the supervisory authority of FINMA. So it's really quite a game changer as before, when it was auto-regulation. But we don't have clear answer today. We don't know what we can change in the process we have to onboard a new independent asset manager we want to work with, or to supervise, or to say to reassess every year the relationship we have with an existing one. And there, it's really important to be able to have a framework to discuss these points with the FINMA. And once again, every bank could do it one-to-one with the FINMA, but at the end of the day, how are you sure that the answer is always the same, and that the level playing field is done in a good timing, that they will publish everything, the decisions they take? I think it's better to have a relationship structured, or question structured through the Blockchain Association for Finance, and to have many banks that are asking the same question once to the FINMA, and to have an official answer just once from the FINMA. So I think that's what we are trying to make happen these days. It will not be easy, or it will not be done in some weeks. I think it will take months. But the first discussion we had with the FINMA was quite encouraging. They know that they have to work with industry, and to make sure that the framework they are building on the new regulation is agreeable with all the partners around the table, and banks and independent asset manager are quite important, have quite important role to play in such a framework, I would say.
I agree. Like Cedric, I think we don't know exactly yet what's going to change with this new regulation. We don't know. We are sharing ideas between us, but what is sure is that when everything will be in place, and when all the EAMs will be licensed, there will be a change, and we will put some new standards in place. So we don't know when, but what is sure with an initiative like We Can Comply and with the Blockchain Association for Finance is that once we will be able to simplify the process, we will be extremely quick in sharing the new standards between all the players, and we will be extremely responsive in implementing these new standards within the platform. So it will definitely accelerate the way the processes will change, and the way the whole financial sector in Switzerland, and maybe internationally speaking later on, but it will accelerate the way the new standards will be adopted. And I think that's another reason why blockchain will bring some efficiency, is that the alignment between players will be much quicker than in the sector today. in the economy today.
Perfect. Thank you very much to both of you. Maybe one question. So the platform is only live since March, so that's still very recent. We can see some activity on our side. What has been your effort, perhaps on the bank side, to connect with your asset managers? How did you communicate the message about the Blockchain Association of Finance, WeCan, and what was the feedback that you got from these external asset managers?
I let Benoit first for once, I would say. No?
The question is about the way we want to communicate. That's the...
Yeah, how have you communicated so far towards your external asset managers that you were part of this project, and what was the reception on their side, essentially?
I think, and I'm coming back to the change of paradigm that I mentioned before. I think it will take some time. I think we were maybe a little bit too much aggressive in the way we thought this will be adopted and seen as a clear improvement. I think that's not that obvious because of this question of trust. Once again, because maybe the timing also is difficult. You know, we went through quite a difficult period, I think, where managing business from home, etc., make things maybe more difficult to adopt and to understand. This might not be the first priorities for external asset managers. So we really need to educate and to explain what is the long-term vision with regard to this project, and to make it become a priority. Because yes, we know most of the external asset managers, they have this FINMA objective, this FINMA license constraints in the short term. So I think we really need to find a way to help them and support them through the platform to go through this very important step. I think that could be an accelerator. So we are working on this within the Blockchain Association for Finance and at WeCan Comply. I know that, and I think that's a very important point that could accelerate. So no, it's a day-to-day work with our partners, with our external asset managers. That's a day-to-day work to bring knowledge around the WeCan Comply initiative, because that's not obvious. That's clear.
Thank you.
Yeah, same with us. I think we are talking about a changing paradigm. We are talking about technology. We are talking about change management. But still, the only way to do it is to talk about it with our counterparty, and the best way to do it is to do it physically, I would say. So we are trying to. What we did, we first trained the client relationship manager inside the bank to be sure that they understood the platform, they understood the operating model, and after we ask them to contact their independent asset manager and to ask them or to present them the solution and to share with them the value added that they could have by adopting the solution, and then to nurse them if they join the solution. And I think it's quite a classic way to do it. If you have to do change management, it's a lot of time and a lot of effort to be made in order to have the solution to take to begin to fly, I would say. And one sign that is very a good sign, I think, is that we have some asset manager that are asking ourselves what is we can I join, and so on. So we see that we are pushing, we are asking our CRM to go and to talk about the solution, but we have also a pool. We have also some independent asset manager that were being made aware of the solution or of the project by other means, LinkedIn or I don't know which mean, and they ask their bank, their trusted banks, what is it about? You are joining that solution. Why should I join? And so on. So I think it's what is taking place these days, and I joined Benoit. It will not take days; it will take weeks and months to go with the size we want to have. But it's always a bit chicken and egg. So we have. I think one thing that was great is this Genevan bank decided to go first. So it's regarding the question before. Yes, it's a bit Geneva-based innovation for the time being, but we were quite aware that it will not be a success if we are not able to have Swiss-German part banks being part of the solution, and the bank and IAM, independent asset manager, based in Swiss-German part or in Ticino or in Swiss-Italian part, and we are working on that quite every day, I would say.
Thank you very, very much, Cedric. Maybe we have 10 minutes, a bit less than 10 minutes ago. So maybe I have a question for Nicole. I'd like to know, what do you think are the perspectives for the external asset managers? I think some past, a few months ago, or maybe a year ago, there were some talks about a lot of consolidation on the market. Some independent asset managers might not be able to face the hurdles of the new regulation. What is your view on the market? How is the market going in general for external asset managers, and how do you think Comply is going to help external asset managers maybe to face the challenges?
Yeah, that's a very interesting question. I have to admit, for the last 4 or 5 years, I was speaking about consolidation of the market for the EAMs, and it has never really happened. Everyone is talking about it more now with the new regulations, but what I can see and feel in the market right now is actually a bit almost the opposite. I can see several, new outsets that have been formed and created. Yes, there have been a few transactions, but it's not as important as we probably all thought it would be. I think it is something to be watched towards the end of this year and beginning of next year. But it's also not easy probably to sort of reunite two outsets together because of the history that all these institutions have and the way they conduct their business, which is very, very different for every one of these 2,500 EMs.
It is a large market. Great. Does anyone want to say anything particular? Was there any subject that you would like to mention, maybe to wrap up this session? Show of hands. No. Okay. Well, thank you very much for attending to our panel, and all the participants who asked questions and listened to us today. We look forward to connecting with you, and of course, if you have any questions about Comply, feel free to ask us. There will be some more publications probably on LinkedIn about the participants, and you know where to find us. So for now, let me thank you again to the panel, and also wish you a great afternoon to all of you.
Thank you.
Thank you, Oliver. Thank you, everyone.
Thank you. Bye-bye.
Good afternoon.
Oliver. Thank you very much. Bye.